Back-to-back letters of credit are a financial instrument used in international trade to mitigate risks associated with transactions between buyers and sellers who may not be familiar with each other. Essentially, they provide a mechanism where banks guarantee payment to the seller upon fulfillment of specific conditions outlined in the letter of credit. These letters of credit are particularly useful when a buyer wants to purchase goods from a seller but lacks the necessary creditworthiness to secure financing directly. In such cases, a back-to-back letter of credit can be used to bridge the trust gap between the two parties involved. In a back-to-back letter of credit arrangement, two letters of credit are issued. The first letter of credit is issued by the buyer's bank, also known as the issuing bank, in favor of the seller, who is the beneficiary. This is called the master letter of credit. The seller, upon receiving the master letter of credit, then approaches their own bank, referred to as the advising bank, to issue a second letter of credit. This second letter of credit, known as the back-to-back letter of credit, mirrors the terms and conditions of the master letter of credit but is issued in favor of the actual provider of the goods or services, which could be a manufacturer or a supplier. The back-to-back letter of credit assures the seller's bank that they will be reimbursed by the buyer's bank upon presentation of the necessary documents proving the fulfillment of the trade terms. These documents typically include invoices, shipping documents, and inspection certificates. This interconnected system of letters of credit ensures a secure payment mechanism for all parties involved. Back-to-back letters of credit offer several advantages in international trade. Firstly, they mitigate the risk of non-payment for the seller as the payment guarantee is provided by the banks involved. Secondly, they provide a level of security for the buyer as the banks only release payment upon verification of the trade documents, ensuring that the goods or services meet the agreed-upon standards. However, back-to-back letters of credit also come with certain disadvantages. One of the main drawbacks is the cost associated with issuing and managing these letters of credit. Banks typically charge fees for their services, which can add to the overall transaction costs. Moreover, the process of establishing and executing back-to-back letters of credit can be complex and time-consuming, requiring significant paperwork and coordination between multiple parties. Back-to-back letters of credit continue to play a crucial role in facilitating international trade, particularly in transactions where trust between parties is limited. By providing a secure payment mechanism, they encourage trade and foster economic growth. However, it's essential for businesses to carefully weigh the advantages and disadvantages of using back-to-back letters of credit before incorporating them into their trade financing strategies. While the costs and complexities associated with these instruments can be significant, their ability to mitigate risks and enhance trust in international transactions makes them a valuable tool for businesses operating in the global marketplace. As international trade continues to expand, back-to-back letters of credit are likely to remain an important element of trade finance, providing a secure and reliable framework for global commerce.